Good evening, everybody. What is going on? We are live -1. Not sure if Tevis is joining us tonight. Thank you all for being here. Roy, I feel like I haven't seen you since yesterday.
Yeah, long time no see. Actually, not really, but yeah, good to see you. Let me hit the light switch real quick. This shirt, the room is too bright.
It is super bright, sir.
Yeah.
Super bright.
Let me kill the overhead. It should be a little bit better. All right. There we go. Not as bad. Still bright. How you doing?
Well, how was your flight? Good?
Delayed 3 hours in an airport is not exactly good, but the silver lining was when we finally got out, ended up that out of the entire plane, the only empty seat happened to be right next to me. That was great.
Okay. All right. Well, thank you everybody for being here. Got a lot of regulars here. Austin Finds Alpha, Lena, Shells, George, June, Rusty. Thank you everyone for being here. And before we go any further, please take a moment, read the disclaimer. We are not financial advisors. We have no idea what we're talking about. We just do a lot of research. Everything is for educational and entertainment purposes only. We have no idea what your situation, especially if your name is Ray. So please do your own due diligence. And remember, we cannot make decisions for you. Anyway, Roy, a lot of stuff going on this week, a lot of uncertainty in the market. SoFi did not get in the S&P. Why don't we start there about the companies that were named, and we'll roll into other things.
Yeah. If you want to throw them up, if you have a link where I can pull one up, but SoFi at the time, I think Polymarket put it at like maybe 20% odds, maybe a little bit under than that. Vertiv was a favorite, both on X among retail. Like, frankly, I haven't done S&P 500 predictions since predictions markets have been a thing, so it's been a bit. But even like a year ago, I was putting up Vertiv as likely to get in. Lumentum, Coherent, and EchoStar. Some of those are actually really barely eligible in terms of EPS and market cap. But Vertiv getting in is, of course, no surprise. And there's always names that I don't expect to get in. So,
you know what was the most surprising to me? That Cheniere did not get in. The market continues to not put Cheniere in there. It is widely profitable in an area that is likely to see significant expansion over the next decade. I'm just surprised.
Yeah, I had to double check the market cap. I thought it was very eligible. Yeah, it's 53 billion. So, really good company. I'm invested in a competitor, VG, but if VG didn't exist, I probably would have done these guys over next, just because where their revenue is. Like, it's a good company. So
yeah, I mean, they're a great company. It's crazy it didn't get in. So
yeah. It will.
SoFi not getting in. I do think it gets in 2026. How about you?
Oh, yeah. It might not this next quarter, just where they're at with the market cap stuff. Like, if we continue to market chop, maybe they go under that for a little while. Like, we're right next to it. We can't predict that. I would be very surprised if SoFi is the current price all year long. I think it's going to be much higher. Still, probably not my price target earlier. We're just not in that kind of macro. And then B, like, you look at eligible companies. There's a lot of eligible companies, but there are not many that have as great of a case as SoFi. And there's reasons why that they might delay for a little bit. We saw it with, Robinhood, another fintech company that's in the space that was a high flyer. It took probably 2 quarters longer than it should have, but they did finally get in. Coinbase got into. There's a lot of reasons why they should get in. So I would say 90 to 95% chance that they do. Well, at least in terms of announcements. They'll announce in December again for the final time this year. But yeah, good chance. Well, what odds would you say?
I don't know. 50-50 at this point. I mean, I don't want to say anything more than that because I really have no idea.
Yeah. Well, I mean, like, if you look at eligible companies that are out there, and there are quarters where they don't add anybody or they don't add as many. 3 to 4 is typical. But let's say that they announce the 3 announcements. There's just technically 2 more inclusion dates after this one that fall in this calendar year. So out of the 3 announcements, let's say they just do 3 each time. So that's 9 more names. Like, can you think of 9 companies that deserve it more than SoFi? No.
Deserve it? No. No, not if we use the phrase deserve it. I do think eventually Chenier is going to get in. I wouldn't be surprised if Reddit gets in for some reason, even though I just don't understand why people use that company. I don't know.
Ferguson isn't in the S&P 500, are they yet?
Not sure.
That's one that's been deserving if they didn't get in already. I don't think that they are. I think that they continue to be. I've not tracked, this extremely closely outside of like SoFi's entry for a little while. But yeah, I mean, like you could probably find 5 or 6, and there are companies that are less deserving that'll get in. Frankly, some of the current ones, and that happens, but
Right.
yeah, at some point SoFi gets in, very likely this year. I think 50-50 is low, man, if you're including the announcement in December. But yeah, it's like the nice thing is the bull thesis of SoFi is not, they get in the S&P 500. That's just a cherry on top of a delicious ice cream sundae of catalyst for SoFi.
Yeah, look, I wanted to see it this quarter. I hope we see it next quarter. I think that SoFi is going to continue to do well, and I think they deserve it. I think right now it's just not a good time for financials to be added only because it's already a large weighting. And I think the market is scared we're going to be in a situation where commodity markets stay uncertain for longer, oil stays higher for longer on both Brent and WPI, and then you cause the risk of forward CPI outlook to increase, which throws rate cuts in flux for May/June. And I just think that right now the market's probably looking at is not the right time to add financials to S&P. But I could be wrong.
Yeah, I mean, like you and I would think that,
Right.
and it makes perfectly logical sense. But we've seen times in the past, and they'll do it again, where the S&P 500 they seem to have no rhyme or reason. If that was a consideration, that they'll just say, we don't care. And maybe it's just like they'll make the occasional exception type of thing. But I think that that's probably not really the way that the company is looking at as far as like being overweight in the sector into a macro that's not the best. They don't seem to care.
Yeah. So you got a bright shirt on. Why don't we talk about the event? You were at the event with Amit.
Yeah.
And for everybody that doesn't know what event we're talking about, it's a Robinhood event. How was it?
I'll be honest, Steve. It was the worst Robinhood event that I've been to, and that means it was very, very good. Like I would actually say excellent. The hard thing is they've had so many good, amazing events that as great as this one is, and any company that did a similar one should be proud to put it on. It wasn't their best. But yeah, it was great. Like it was a little bit smaller. Is at the TWA hotel there at JFK. So it's nice flying into JFK and then just taking the SkyTrain, whatever it's called, right over to the TWA hotel. Lots of historic stuff. I love that too. And smaller number of people that some of these have. Of course, the Summit's the big one where there's, I don't know, I think they invited over 1,000 retailers. This is much smaller, more intimate. Which is good in a lot of respects too. But yeah, the best thing about it though, and this is always great, is just the networking of like getting to actually see and meet people in person. Some of those are people that you've talked, like you and I, like we didn't meet at this event, but like it's a different thing, like meeting with you in person, drinking a Shirley Temple in front of your face, and
as long as you enjoy it, that's all that matters. I could care less what you drink.
Yes. As long as it's not a well-done steak, right?
As long as it's not a well-done steak.
With ketchup.
Oh, my God.
I shouldn't say that. We don't want to give a bit ideas, so.
No, he eats a medium rare now.
Good. Yeah, I didn't know that. That's good.
Yeah, he's medium rare.
That's the way to get it right there, so. But yeah, like meeting people in person, getting to see them and just swap stories, and it's not all about markets all the time. And then you've experienced some of this, and we got to talk about your interview with Vlad. Amit and Steve got to interview Vlad. I was a spectator to that. It was,
Roy got to watch it in the green room.
yeah. So I don't think I'll even give either of you guys a click, even though it's very deserving for the interview because I've seen it already.
Oh, you saw it?
Yeah. It's really good. I know that Vlad does a lot of interviews. There are questions that they ask that nobody, as far as I know, has asked before. Vlad is a bit of a polymath, that he's well versed in so many different subjects. And yeah, it's fascinating. Like some of his answers on things, I was like, I never thought of it that way. So this was your first time interacting with anybody from Robinhood, and you started at the top with Vlad. What were your initial impressions with him? And actually, while you're doing that, can you first, while you're thinking about that, just throw up the link if somebody's on my channel, if you have the YouTube link, just throw it up so that they can see that, they can pause, in case you're not watching live or whatever, and switch over.
What link do you want me to throw up?
The direct link to the Vlad interview.
Oh.
Or the channel name.
Yeah.
It's not on your channel. So
no, it's not on my channel. So hold on.
I just thought of that when I asked you the question. I'm like, oh man, I better shut that out because somebody's going to click over and be like, where's the interview?
All right. So good call, Roy. So it's on the Basis Points podcast channel. Link is here. And if you go to YouTube and you go to Basis Point Podcast, you will see myself and Amit. You can watch it there. And to answer Roy's question, this guy is a killer. This guy is a winner. He does not know how to fail. And we were very fortunate because Vlad showed up half an hour early, and Roy, Jess, Amit, and I got to talk with him for a good 30 minutes before we started the interview. Very down to earth, super intelligent.
Yeah.
Incredibly just nice and polished. And it almost makes me see, I don't want to say it a certain way to disrespect SoFi, but at the same time, I see the vision. Like, I really see the vision on it. And he does such a good job of tying everything together into not just a one-trick pony, but a suite of products. And I really like a lot of the ideas. And he makes you feel like no matter what he is going to do, it's going to succeed. And he just doesn't know how to fail. I mean, look, Amit introduced me. The first sentence out of his mouth is, this guy doesn't own the stock. First thing he said. And Vlad's like, too expensive? I'm like, no, I actually rated it strong buy when it was around 50. It just ran away. And I gave it a neutral around 130. I don't know. Never bought it. But
and I had to be the jerk and be like, I even gave you the stock. And
Roy saw that Amit threw me on the tracks. Roy tied the ropes around my feet and hands, so I couldn't get up. Like, I even gifted him a couple of shares to get him started. But awesome guy. I am super bullish about the future, and I really like the way he answered my question, because I asked him in the interview about what's the differentiating factor going forward, because we're about to really witness the largest wealth transfer in the history of humanity over the next 10 to 20 years. And how is Robinhood better positioned, and what's the real value proposition for people who inherit large sums of money to leave the platforms they're on and go to Robinhood? Because most likely the silent or boomer generation, their money's probably with Vanguard or State Street or Merrill Lynch or Schwab. Robinhood's probably not their brokerage. So what's the reason that people should move there? Great answer. And I think Robinhood is going to compound for many years going forward on the fundamentals. Now, that's obviously not a recipe for the stock is absolutely going to go up. But by this time next week, I may be an official shareholder. and not like 10 or 20 shares.
Like
So
it would be a little different maybe if it was trading at like 130, especially in the current macro. But I mean,
yeah,
it's not. I would be a buyer here, except A, I have no money right now, and B,
and you have a good position in it.
yeah, I think it's reclaimed the number one in my. In fact, it has because Air got crushed today with the hyperscaler data center Oracle Nvidia stuff.
Yeah.
That whole sector, but
At 77, looking at it going sideways since pretty much February, I wouldn't be opposed to starting a position here. And then if it makes a leg down to 50, dollar cost averaging into it is
yeah,
the way that my mind is starting to work on Robinhood. I want to own it. I really want to own it. He made me a true believer in it. I want to own it. I'm actually very interested. I'm actually on another tab right now looking at the Robinhood Ventures Fund. A lot of people don't invest in closed-end funds. I do. I own a bunch of them.
it fell.
And
It's more attractive. Like it debuted today.
I am very interested in RVI, and I would just like to see the holdings. It's probably because it's day one. They don't have it out. They have the thesis of the 7 companies it's in, but I want to see the
Yeah.
holdings. I want to see the prospectus. I want to read through it. I want to see if they're using leverage. I want to see if there's going to be a distribution. Like I want to see a lot of things before I invest in it. But I do think I will be adding RVI as well to the portfolio.
Yeah. Real quick on the meeting Vlad thing, like it was not quite the same trajectory. I was an early entry into Robinhood, but I was just looking at it as a swing, nothing more. I'm like, hey, Vlad's probably a decent CEO, but more of a better product creator. I just saw the triple catalyst lining up, and so I was right on that. And then I got this invite down to the first summit that they did. I think it was their second event, but the first one that was for a lot of retail. And even prior to that, I was talking with I think you might have been there, Steve, but I would know for sure Tanner and Tevis, and I was like, hey, I think I might actually just go long and take my gains in the leaps and just this is a long position. I think the thesis is much stronger than I gave it credit for. And I was like, I think 90 or 95% sure that I was going to before that summit. And one of the guys, and I don't remember who it was, basically said, well, it sounds like you've already made up your mind and it's just going to take a smile from Vlad to convince you. And it's like, it took more than that. But I mean, like, you've met Vlad. You need to come to the next Robinhood event that you're invited to, and you can be a +1. There's nothing wrong with that because they actually give you a glimpse and direct access to many of their employees, especially if it's a summit. There are like from all different lines of like they're not like entry level people that have just been there for a second, but you get to see engineers and the people that work in marketing and C-suiters and Vlad and just people that are junior employees that have been there for like 3 months, and you can ask them questions. And there's very few things. There are some things obviously they can't answer. Usually, if they're lower down, they don't know the answers anyway. But like seeing the culture firsthand, that is what really convinced me. So it starts at the top with Vlad, but that whole team, or at least 90% of them, are just devoted to the mission, focused, love what they're building, love where they're at. They're working super hard. And I asked a question of this, like of a bunch of the people there. I'm like, so you put out so much, you've done so much. Like, is this now? Are you tired? And they're like, not really. No, just energized. Like physically tired, from the event and everything, but they're excited about what they're building and doing. So this is a company with lots of drive. I think it is generational. And yeah, I won't give anyone here financial advice, but for you, Steve, it's definitely time to look at getting in.
Yeah, and look, it's not like I haven't been bullish on them before. Like I did rate them on a very bullish methodology. It just got away from me, and I was adding to other things. I did happen to say to Vlad, I was like, "Hey, do you know anybody at Robinhood?" He's like, "What do you mean?" I'm like, "Well, I'm still on a wait list for the gold card." Like, do you know anybody there? Can you get me off the wait list?
Yeah.
And then he was like, "You use the product?" I'm like, "Well, yeah." And he asked me like how I started using the product because this was after Amit and
Yeah.
Roy jumped in, help me on the tracks. And I said to him, I went to a competitor to buy Ethereum, and the fill price was so expensive that I downloaded the Robinhood app and looked at what the fill price would be, and I could not believe it was, when I say a fraction, it was like a 15th of the price. And I said, I just been using Robinhood to buy Ethereum.
Yeah.
And then I showed him that I'm still on the wait list. So who knows? Maybe I come off the wait list over the weekend or early next week.
I wouldn't count on it, but if you do, congrats. It is a really good card. So that's why there's 2 million people on the wait list. So what did you think? Because you saw the platinum. That kind of went viral. It actually, like, real quick
how
on that.
heavy that damn thing is?
Oh yeah. I mean, I was there. Remember?
That's what I'm saying. Can you believe how heavy it is?
Oh, okay. Yeah, I misheard you. Dude, it's crazy because, like, the solid gold. I don't own the solid gold, but I know people that do. And you felt the solid gold one too.
Yeah.
The platinum is twice as heavy.
It's 58 grams.
Yeah. That's. I like the look of the gold better, but the feel of that one is like ridiculous. It's not a card for me, not at all. I don't like the gold. I think is honestly, if you use credit cards, it's a card that like anybody should use and benefit from. But pay it off. Like don't like max out your interest and get charged all the time. So I'm not saying use it properly and appropriately, but the platinum one, it's very clearly targeting the high end. And I mean, frankly, I'm not that person anyway. But there's a lot of people that are on X that are excited about it, and obviously they had over 1,000 people like immediately. I think within minutes sign up for it. So
he asked me if I was going to upgrade to platinum. I'm like, I don't even have gold yet.
Yeah.
How can I upgrade to platinum? I don't even have a gold card yet.
Maybe that gets you to that. But so let me ask you on platinum. You're on the higher end, and you probably have cards like this too, or plenty of people that do. Do you think how attractive do you think this is going to be towards that demographic, or is it just kind of one of many other pretty good offerings out there?
So there's a lot of people that are really into the whole credit card game and maximizing rewards and all that stuff. I don't do anything. All I want is cash back. Like, I don't take advantage of anything else. So I don't really look at things that deeply because all the additional perks I'm never going to really get use out of. Maybe it changes going to amidst meetups now where I'm going to want to get a card specifically that gives me lounge access, that type of stuff. I haven't gotten on a plane since 2019. So taking a step back and thinking about it, I went through the rewards, and I'm also against paying for a card just on principle. Yeah. I don't want to pay $6.95 for a card or $8.95 for a card, but I understand why people would if they travel a lot or if they do a lot where the card gives them 3, 4, 5x that money in things they use because it's a great value. When you stack up that versus an Amex versus another one, I think that their rewards are very comparable or potentially better depending on how you're going to use it. And I think that they're going to give a lot of those other cards a run for their money.
Yeah. So like what I think that they're doing and building, and it's very evident. They a year and a half ago, I believe, had announced some very aggressive matches that one has been discontinued since then, the 1% everything match. And it got a lot of wealthy people to transfer over to Robinhood because it's like, dude, if you're offering me a free 3%, yes. Now the catch was that it takes 5 years for that to be like fully vested. That's not the right term, but they want to make sure when they got those people that they wouldn't just say, okay, 5 years, awesome, I'm done with your platform, I want to move away. That's a loss for Robinhood. So what they've been doing, they've acquired Trade PMI, which is there for people that want more of a white glove service. They've been building out white glove services because of this and a couple other reasons as well. They're offering incredible perks. The gold credit card was a good one. This one is a great one for this type of audience. And of course, we saw on full display the family focus really on this. Like even Vlad's family was there, which is really cool. But having custodial accounts is just one part of this. They're looking at trusts, tax services, and they know who their clientele is, but they also want to make sure that they not only retain but also capture some of these. And the last little bit I'll say on this, like part of that, it seems very natural. Like great wealth transfer is going to happen. They talk about it all the time. Well, not all the time, but they bring it up, from time to time. It's going to benefit, of course, SoFi, Robinhood, Chime, and many of these other companies. Not Chime as much, but and it's easier though to capture more of that if you already have the whole family account. So I think it's very clear what they're doing. These are long-term things, not things that they launch that are like instantly going to be accretive and they're going to print money off of them like many of their other products in the past.
Yeah, I think they're going to do good with it. I think the family of products is really good. I think targeting the family, being able to add people to things, I think they're doing it right. And I like the velocity of products that they have going on. And I think that their pipeline looks interesting. I think this card is going to just add an additional lever for them. And the cops are not coming for me. Do not worry. That's not for me. And one of the things we only had a certain amount of time with Vlad. I would have liked to got some more questions in. His assistants knocked on the door. They had to go. Obviously, they were doing a lot of things. It wasn't just the event. They squeezed us in. They were obviously ringing the bell this morning with RVI, et cetera, et cetera. So one of the things I want to see is, are they going to get into the mutual fund game and wealth management game and the 401k game? Because I think there are so many fees that they can generate from this. I looked at my work-sponsored 401, and every quarter I pay money to the company it sits in, on top of the management fee that gets charged by the mutual fund that I am in. And I just think that it's one of the things I've said about SoFi. I'm going to say the same thing about Robinhood. If they have a true wealth management and retirement plan administration and get into their own mutual funds, it could be a huge vector. I know that they're doing the whole tax stuff. He said something I thought was very interesting, that they are going to, I don't know if he broke it. I don't know if he's ever talked about it, but he said that they're going to be offering trusts, both revocable and irrevocable, on Robinhood. I mean, they're doing a lot of things, and I think this would be just another thing that they should do.
Yeah, I mean, like I think Trade PMR. I don't know if you're familiar with that or not, but it's an RIA, so it's along that vector, along that line. 401ks and mutual funds. I can't remember the context, but I think it was from the investor day, but you'd have to go back and see that was a year ago, maybe a little bit over a year ago. But anyway, they did allude to it like as one of those long-term things that they're heading towards. One of the other things, by the way, that they're doing, Steve, well, there's like two other big pushes. So this obviously on the higher end, trying to get that type of client, and they've been working on that for a while. Of course, international is a big push right now. They're developing like 3 different platforms as well that's going to capture some of what they might capture from that. There's no guarantees on that. Is a lot of institutional money. And so if you look at something like IBKR, I believe it's close to 50% of their revenue, their net revenue volume actually comes from institutional, not retail. So, Robinhood's percent right now is less than 1%, just because they didn't offer anything until mid last year. So, and it's Bitstamp specifically. That is another vector that they're growing. But yeah, lots of TAM expansion. But like the best thing is, at the event they go through and they said, like, here's the roadmap for what's coming out this year. We all know like that is going to look so differently by the end of the year, because there's a lot of things that they have, multiple other events, multiple other announcements that are going to come up, multiple things that they're going to do, some which maybe they haven't even planned on yet, but they're that agile. Their cadence is just insane. So yeah, I don't have to sell you any more on that, but like, let me ask you on one product that I heard your answer already, but I think the audience, if you don't mind sharing it, would love to get your take on this. You're more of a dividend guy.
Yeah.
And they announced, and I'm not really a dividend guy. I do happen to own dividend stocks, but not really care about the dividend like Nvidia. So the early dividend stuff, I thought, oh man, this is a huge deal. Dividend investors are going to love it, and I do think that there are some that will. But what was your take as a dividend guy?
You were standing right there when I told him to his face. So I'm going to take credit for something if it happens, because I gave him an idea that may actually happen.
Yeah, you heard it here first.
And it's legit. I got witnesses. I'm going to take credit for it. But and what I told him is, originally I was really excited. And then I thought about it. I'm like, it doesn't really matter. And the reason it doesn't matter is because you're just getting the money a month early, and your cycle just changes. So it hypothetically, if a company pays out March, June, September, December, now you're going to get it February, May, August, November. It doesn't make any difference. It's just changing the schedule of the quarterly dividend. And what I said to Vlad is, if you're willing to pay the dividend out 30 days in advance, what would be more beneficial is if you could take the 30-day average share price that's under that first day that you would have paid it out, and if they're reinvesting the money, buy the shares at a lower price, because you have a 30-day window, and there are companies such as PIMCO where, so PDI, depending on what broker you have it with, if you're reinvesting the shares, they buy them at a 5% discount. So there is a way to do it. So we'll see if it happens. I think that would make people move their accounts to Robinhood. 100%.
So there's actually that's yeah. A further iteration would just maybe be like a couple of ways to customize it. So there is typically a drop after not the X day, the payout day. So anyway, like a way to customize when you get the dividend. Do you want it as early as possible? Do you want it after they actually disperse the dividend, like the next day or two? Or would you like to hand it over? This is in the future, but I think we're actually pretty close to this. Hand the dividend over to Cortex, who can take a look at the stock price and invest at the first 5% drop that you see from the time when we could disperse it early up to 5 days after the dividend date. If none of that happens, do you want it just in cash, or do you want us to buy anyway? Yes, no. Boom.
Yeah, that would make sense.
And I don't, yeah, as long as the legalities aren't preventing that, I don't think it would. You know, you'd have to have people sign away their life first, but
right.
That seems very technically possible now. But yeah, like I actually love that, Steve, because so you have the Robinhood app. I don't know if you have to use gold for Robinhood Cortex, but if you don't, like, check out Cortex. If you checked out and compared to some of the other agents that help some of the other competitors, Cortex is best in class. And I'm not just saying that because I'm a Robinhood shareholder. Or
where is it in the app?
So the best way to do it is when there's a stock that moves. So like pull up IMS real quick. They made peace with Novo Nordisk, which is great for them, by the way, up like 40-something%. There will be, you'll see as you pull that up, you click on the ticker, you'll see the chart, and right below the chart, you're going to see Cortex with a brief explanation. It'll tell you how long ago. You can get a longer explanation as well, but it's going to tell you exactly what's going on. I've seen it occasionally not mention something that could be plausible, but usually it's a very comprehensive answer, especially if it's not clear of like, it may be this, it may be because of TA reasons. We're seeing lighter volume than expected here, unusual opt-in chain stuff there, this event, this catalyst. SoFi is pretty good. I'd say actually Publix Alpha is in between. There's a couple others that I played with, but it's been a while. They're probably better now, but they were dramatically inferior to all three.
Yeah, I mean, this is going to sound crazy, and I can't believe I'm even going to say this. I'm considering moving a lot of stuff to Robinhood.
Yeah, you should.
Like, I really am. I'm considering moving some IRAs there. I'm considering moving a brokerage account there. 2% match, like it's free money.
And 3, if you have at least 10,000 margin, which maybe you get 10,000 margin, move it over, and then close the margin.
Wait, you get an extra 1% if you sign up for margin?
Yes.
Stop it.
If you're transferring over 10,000 in margin. Let me pull it up real quick.
So I should turn margin on and then move that over?
Yeah. Well, yeah. Turn the margin on, use it for whatever thing that doesn't move, that's essentially a stable coin, move it over and close it, or, whatever.
Yeah, I need to think about it. I mean,
Yeah, here we go.
I kind of want to sign up for gold, to be honest.
Yeah. Well, so yeah, you need to be Robinhood Gold for this. Get a 2% bonus on IRA or 401k account transfers. Grab a 2% bonus until April 30th with Robinhood Gold, $5 a month. Get a 1% bonus with or without gold year round, contingent on that margin. Let's see, where is that? And then your transfer is free if you have more than 7,500. Yeah.
Yeah, it's pretty crazy. Anyway,
I'm thinking about actually doing that too. I have, some that I don't really manage. So that are just in ETFs. I could just put it in the SPY and NASDAQ when it's transferred over. It's like, it's a 2% match. And I can't do margin with these guys. Otherwise I would I'll take on 10,000 margin for the extra 1%.
Yeah, I got to think about it.
Yeah.
But yes, I'm highly going to consider it.
Plus, you get the early dividends. Not that you care about it, but
No,
so I think the early dividends.
Not for the dividends.
I don't know that this is the reason why, because I mean, frankly, if you get to meet Robinhood folks, I'm sure there's some dividend investors there, but they're not. Some of them are actually dividend investors. So I take that back.
Wait, Roy, is this true? If you're not a gold member, you don't qualify for the gold card?
They will send you an announcement when you are off the waiting list, and then when you accept, they make it very clear you're signing up for the gold card. You pay the $50 annual fee. They give you $270 in matching just to your IRA contribution, so or your Roth. So I guess it's more than that because it's $7,500, whatever the amount is. So essentially, as long as you're putting that $7,500 or whatever towards a Roth or IRA or whatever, they're paying you over $200 to be a gold member. But yeah, you don't have to sign up beforehand to remain on the wait list. That's not why it's long. So the early dividend thing, what that's really for, I think, or who will be attracted to it, there's 2 different types of dividend holders. There's folks like you that you don't need the dividend, you just let it drip every single month. But there are some that use dividends as a source of income or to supplement their income, that treat it like a paycheck. They just leave what's in there, but they don't drip. They're taking that cash out and actually using it to live. And this is an early paycheck to them. It's 14 days early, or I think 17 days on average earlier. Could be substantially earlier than that. There's very few people, especially if you're relying on something for paycheck, that would turn down an extra paycheck.
Yeah, it's interesting. I think that they're going to do really good things. I'm thinking about becoming a shareholder and a customer. I don't know. I want to see what SoFi does. I really want to see what SoFi does here, because I don't know. Maybe it's their marketing. Maybe they have better products and better things. Maybe they just need to do a better way of communicating, because I think Robinhood is just out front so much on this. I don't know. Maybe I'm wrong.
Yeah. I mean, they're, you don't have to convince me. Yeah.
Yeah, no, I get it. You're wearing a Robinhood shirt. I get it. Anyway, all right, let's move on from Hood. And you got Palantir hat. Let's move on from Hood.
Yeah.
Bunch of other things to talk about, but yes, the interview was very good. Please go watch it. It's on Basis Points Podcast. If you're not a subscriber, please subscribe. I never ask people to subscribe. I think it's worth it. There's going to be a lot of good interviews coming up. Anyway, situation overseas. What do you think? My premise on this is I think we're going to get something done over the weekend, maybe next week. I don't think this goes past next week. The reason I say that is because too much of the global economy depends on the 20% of oil that flows through the strait. And we are running into a situation now where we are going to get CPI data, I believe, on the 17th. And it's not about what the CPI data says for February. It's about what the consensus is going to be for March. And the consensus may not be that bad because it's going to take a little bit to work its way in. But
Yeah.
if this doesn't stop and that strait doesn't get open, we're going to get into a situation where oversupply becomes undersupply, prices continue to go higher, and the next consensus CPI could have a 4 handle, maybe higher on it. That would be horrible, especially coming into a new Fed chair. It could stop them from potentially cutting in May or June and could threaten 2 rate cuts this year, depending on how long this goes. So I think that they have to get something done. And China is importing 90% of its crude. India is importing a ton of energy also from the Middle East, 2 of the largest economies. So there's a lot of reasons that this needs to end. And I think there's going to be a lot of backdoor deals going on, a lot of backdoor talks over the weekend. I would not be surprised if something gets done over the weekend or next week. That's just my take.
I hope you're right. I would love that. I think it's going to take longer in the best case scenario. So you're right that there is a lot of factors that are like leaning heavily on trying to get things resolved quickly. U.S. would love that. Everybody but Iran would really love that in the area. And so eventually I think that will win out. There will be pressure. There will be agreements, whatever it takes basically to get things done. If the United States truly is just wanting a regime change there, and that's it, free democratic process elections, and okay, that can absolutely happen, but there has to be like a lot of input from regional partners, which I think Iran has basically created because they just keep, shooting at everybody. Even those that they've not fired at, they're impacted just because of what's happening in the region. So they have a vested interest in peace and stability in Iran. I don't think many of them, there's a few exceptions, of course, really liked the regime in Iran. They prefer something that's a little bit more moderate, or at least, if not more moderate, less militant and destabilizing for the entire freaking space. So if there's some sort of agreement, it's probably going to take some time. This might be 2 or 3 weeks. If it goes really well and really fast, leading to the current leadership structure of Iran just being gone. Whatever that looks like, however that happens, don't know. And that they are able to establish, probably without U.S. presence, and that would be great for us too, frankly, of like making sure that there are real elections that happen. I don't know if that means NATO gets involved, the UN. I don't know. Like none of those organizations are perfect, but it would be difficult in my mind for either A, the United States to be like, okay, yeah, that's what we're going to do, and B, Iran to agree like this soon and this short. Now, the one thing that I think is taking an impact is it's pretty clear that Iran, a lot of people might argue with this, and there's certainly people that think that they have these massive arsenals out there, but the reality is they've been selling a lot of even the Sahid drones over to Russia. But the number of launches from everything has gone down substantially. There was this interesting post by the RAND group yesterday, and I don't know what happened as far as the number of launches today. Okay, here it is. Can you throw this up?
Yep.
So they were examining Iran missile chart, and they did include, by the way, the drones as well. This is a visual. And given the current trend, which again, keep in mind, this was yesterday, so maybe they shot a whole bunch today. I don't know. This won't look exactly like this. It's pretty clear that they are running out or running out of launchers or people to launch it, whatever it is. At some point, they won't be able to fight back at all. And at that point, they may be more open to making a change. And I would love the conflict to be over earlier. It's pain for a lot of people. There's folks that are always innocent that end up losing their lives. I don't want Americans to die for this. I don't want boots in the ground. Even though I'm long VG, I'm like, I would rather that this price tank because
nobody wants to make money that way. And if you do, you're a scumbag.
It's
I
nice
have
that
no
they have,
problem saying that. Like,
yeah.
if that's the way that you want to make money, you're a scumbag.
I
Sorry.
mean, yeah, I could never do it. But the nice thing is, like VG and Palantir for me, I've holding them before, and they were not intended as hedges, but they are in this environment. So I'm like, okay, I don't mind benefiting. I just like that's not why I'm in Palantir. That's not why I'm in VG.
100%.
Yeah.
Look, you can invest in tweak your portfolio due to any type of macroeconomic or
Oh, yeah.
geopolitical tension.
Like
But
wheat
if
is one
you're
of those.
rooting for a war to benefit from it, I don't want to. That's not somebody I want to be friends with.
Yeah, wheat was one of those that was also mentioned a good bit. Like if you're listening to folks in commodity, and I probably can't find where this was being discussed roundly, but in essence, there's a tight window through which farmers need to fertilize their wheat, otherwise yields will be substantially lower. And if this isn't resolved fairly quickly, a lot of the nitrates that actually come and fertilize this area of wheat will not be able to be delivered, and that's really bad for wheat prices. So that is like a form where you can be like, okay, let me go ahead and get the wheat action or whatever. There's a ton of ways to play it. That it's not scumbaggy or anything, but like hoping for war, hoping for prolonged pain and everything, and building your investments around that. I don't know. So
Yeah. So we'll see. I mean, look, I don't want war. I hope this ends. I don't want civilians being harmed, and I hope that the country rebuilds better and quickly, and that this just ends and we just get back to business. So we'll see. I mean, the companies that I think are going to benefit now, I mean, I still think this doesn't matter for Amazon. I mean, sure, in the short term, if oil goes up, then the transportation costs go up and some machinery pricing goes up. But long term, Amazon will be fine. I mean, I'm just, I'm sticking with what I know, and I'm sticking with the companies that I am comfortable with buying.
yeah, and K Dog, he said you guys can just be honest and say it's not your expertise. Yeah, we don't know. We're not saying this is our expertise.
No,
These are just our thoughts, and you should take it basically with as much credibility as just two random guys talking on a bus that you don't know and you don't know where they come from. Because but things take time, and I hope it's less time than I expect. I'd love for Seed to be right. I think probably most of our audience is the same way.
yeah. So we'll see. I mean, oil companies are doing well. I'm in a bunch of them, and if we stay higher for longer, that really runs a lot of risk. But there are hedges, and oil companies are a hedge. Upstream producers are going to make more money. It's one of the reasons I have Chevron and Exxon in the portfolio. Two great
Yeah.
companies that pay me a dividend, huge amount of buybacks, and they're hedges.
Yeah. And VG, like that was part of the reason why I invested was energy stocks move very differently than growth and tech stocks. And I am all over growth and tech. So I'm like, maybe if I'm in a little bit different bucket, it'll make things nicer. And it has, especially because I have leaves on VG. I also have shares. Small dividend at this point, no buybacks. They're too early into that. But yeah, I still got to get my growth on, even if it's in the energy bucket. But I wanted to be there, mostly because of what's happening with energy demand. Big part of what's going on with AI.
Yeah. So, what else do we want to talk about? You want to get into AI tonight? I mean, Oracle, ChatGPT, or OpenAI news.
Yeah,
I
yeah.
mean, I think it's a nothing burger. What's your thoughts on this?
Well, I think first we need to kind of explain what
Sure.
happened. So there were, and Bloomberg has seemed to lean heavily on a lot of these rumors that are many times just rumors and don't end up proving to be true. But they go viral regardless of whatever they're trying to do. So today's was that OpenAI and also Oracle ended up saying, hey, we want out of this agreement to build a very large data center, and that they were backing out. Now, for right after that, then it was, I think, CNBC that said that these discussions are still resuming as far as building this. Everything's still on the table. So both actually can be true. It's not CNBC saying you guys are complete idiots, but I think it's probably true. The stock market acted like it. Nvidia went down 3%. That's not too surprising. NVIDIA, of course, benefits from these. Airtest Systems was caught up in this. Anything actually that had exposure to what's happening in the space. I believe memory as well was down pretty big today. Maybe some other reasons there too. But regardless, the one that surprised me is Oracle. Now, it is a good thing, I think, for Oracle, just because you look at where they're at with their debt situation. And they would have to get into a tricky situation of either going even more massively into debt or giving up equity to somebody like NVIDIA, which happens plenty of times, to be able to fund this. So I don't know that this signals necessarily that demand is not there. The market seemed to treat it that way. If you look at like CoreWeave, if you look at Nebius, if you look at Iron, they got smacked around hard. I think it's, I think it's credible. I think it's just Oracle realizes that they bit off way more they can chew. They're not on the same level, even though they tried to be, of even an Amazon, but all the hyperscalers, they're not even close. So
no, the balance sheet is severely leveraged. None of the hyperscalers have a leveraged balance sheet. I just read through the report. OpenAI and Oracle decide not to expand their data center site in Alberline, Texas. I probably mispronounced that. So it's currently 1.2 gigawatt. They were going to expand to 2 gigawatt. They decide not to. Meta is now considering stepping in to lease the planned expansion, which is owned and being developed by, I don't even know this company, Crucio, maybe? I don't know.
Crucio.
Okay, sure.
Yeah.
So Oracle and OpenAI's expansion plans were hampered by financing issues and changes to forecast demand. So I think this is a nothing burger only because if OpenAI doesn't want that expansion for whatever reason, somebody else is going to step in. There's so much CapEx being spent. One expansion is not something that signals that there's a bubble or any risk in the CapEx movement that we're seeing. Oracle is the one that I'm most worried about. I want to see where they report next week. I have a feeling their CapEx is going to be so big compared to cash from operations. It's going to make the free cash flow fall even further into the negative. I have a feeling that there's going to be more debt on the balance sheet from tapping the debt markets. And we may see Oracle go to 125.
Well, and the nice thing is, like, analysts will absolutely do their job here. If Oracle doesn't put in their slides and their presentation and talk about like why whether these are credible or not, and if they say we can't comment on that, it means that it's credible.
100%.
But like either way, analysts are going to ask about that. If they don't want to talk about it, well, too bad. They will ask, even if they get pushed back on like that. That is an answer of a kind. Now, if they open up a little bit and they say why, I think it's going to be exactly that. Like, it's going to be obvious in the balance sheet. It's going to be obvious in the way that they're talking about their cash flow situation, that they just bit off way more than they could chew, that they still see it as an opportunity. Maybe they'll get back in or not. Doesn't really matter there. But that clarity, I think, is going to help the whole space just because people don't know exactly why this is. But I mean, that's the most obvious explanation there, especially in the light of, like, we've already seen CoreWeave, we've seen Iron, we've seen Nebius, NVIDIA, the hyperscalers, AWS. I mean, like, my goodness, everything else is indicating insane demand, insane ramp. It's not slowing down. It's accelerating. It's probably underappreciated. And then you have this, and the market's in the mood to believe this, shoot first and ask questions later. So that might give some stability there to this structure.
Oracle's balance sheet is so bad. So 19.77 billion in cash on hand. You would think, wow, they got almost 20 billion in cash on hand. Like, geez. And then you keep going down. Their long-term investments are depleted. They have 416 million. So let's just call it 20 bill in liquidity. Their long-term debt is $99.98 billion. Watch this expand to like 120 this quarter.
Yeah, let me pull this up real quick. So there we go.
I'm very worried about it because the reality is that they just spent in the trailing 12 $35.5 billion on CapEx, and their cash from operations is less than 23 billion. It's just not a good situation, but it's Oracle. I don't believe they're going under. And if
No.
they go low enough, I'm a buyer.
I mean, if they go low enough, there's companies that'll be buyers. But
That's it.
yeah, so red here, I didn't pick the color, but red is actually their cash, not their debt. The long term liabilities, what you refer to, 140, and then 100 for long term debt as well. This is a bad ratio. You don't want to see one to one is fine. 1 to 2 is fine ish, depending on the cash flow. That's scary.
Look, the big thing is, can you afford the debt? So Verizon has always been a company where people continuously say they have 100 billion plus in debt. Well, it's like, yeah, but they do 50 billion plus in EBITDA. They can afford to spend 6 billion to service the debt and then refinance as rates come down. Oracle, on the other hand, their EBITDA is half of what Verizon does. 26.5 billion. So, I mean, can they afford it? Yeah, but those interest expenses are creeping up. Their interest expenses right now, 3.85 billion, and that's likely to go over 4 when they report next week. So, there's a lot of things I don't like about Oracle, but at the same time, on a per share earnings basis,
Can you throw this back up real quick? I did see this and used it, and it's great. And not a fiscally AI commercial, but yeah, the grid view. If you guys are using it, go to this. You can click, and it has a separate chart. It's nice and clean. So yeah, this is Verizon, by the way. So it still is structured ridiculously in terms of debt, but like you said, different cash flow situation. This is a company
much different.
And honestly, like, this is a space where it's extremely capex heavy. That there are no, at least to my knowledge, no clean balance sheets anywhere that it comes close to. I mean, there's some that are better than Verizon, but none are clean.
Telcom is extremely capex heavy because of all the 6G bandwidth you got to freaking, and the spectrum you got to buy. So it's extremely heavy capex. That's why it's a regulated market.
Yep.
Now, when it comes to Oracle, this is something where I would say if it goes to 125, I would probably start a position. And if it goes under 100, I would add. I have no idea. It could go back to 200. But I think the next year for Oracle is going to be, prove it. Show me you can monetize. Now,
yes, they have
analysts, when you look at Oracle, this is what gets me very excited. It's not 3 or 4 analysts. It's a lot of them that are showing tremendous revenue growth. So they do not report on a calendar year. Everybody knows I freaking hate this because it just makes things freaking crazy. So when they finish this fiscal year in May, okay, they will have done 16.5% revenue growth theoretically. For the next fiscal year, which is really everybody else's 2026, 40 analysts are saying they're going to grow revenue by 29%. The following year, acceleration to 48%. And then the next year, 43.5%. So they'll close this fiscal year once they report in May or June, whenever the earnings are. They're going to go from 67 billion, and then over the next 3 years, high probability chance of going to 183.
Yeah.
I mean,
like, Oracle is I think is being disrespected here. I was actually a little bit surprised. I was thinking it'd probably fall about as much as Nvidia. Chris was saying this was extremely bullish, and I'm like, my analogy was, it's bullish like losing a thumb because you had to get it amputated. You didn't die from the infection, but you also don't have a thumb. Like, this is egg on the face that they bit off way more they can chew. They just weren't where they needed to be. They couldn't monetize as quickly. Whatever the case, missed execution, missed opportunity. There still is a cost. They're not going to zero. And that cash flow situation is going to be dramatically improved. Like you said, I think the analysts might have a low there.
This may be a situation where this goes a little lower after earnings and stays sideways for a couple of quarters until the situation starts to change as they're able to generate revenue and cash flow from their new assets coming online. That could take 6 to 12 months. It may take 12 to 18 months, but over a 3-year period, I wouldn't be surprised if Oracle goes back to 300, 350. It's just, what does it do in the short term? And when do you, if you want to make that bet, when do you start a position? For
Yeah.
me, I think it has a good chance of going lower. That's why I'm holding off, but it's something I'm interested in. And they can always scrap the dividend. They can always
and I'm out of money right now, but that would be like more for me a swing in that same kind of environment. Micron also, but I don't have the money right now. Something would have to run, covered calls get let out, or unexpected lottery windfall. So I don't gamble. So
yeah, and I don't know that I would consider Oracle a gamble, but that would be something I would say that would be, I would have to hold it for 2 or 3 years. That's not a thesis that I think is a 6-month thesis by any means.
No, I would give it time to play out. Like it could take years for the dust to settle. But yeah, it tanked. It just tanked the market. Like Nvidia has been getting beat up with these Bloomberg headlines the last 2 days. Yesterday was apparently America is considering saying for every cell that Nvidia and AMD has, they have to seek approval for it, regardless of the nation, if it's not America. And it's like, okay, that's probably not going to happen. It seems ridiculous and over the top. They're just considering it. It may be a case of where they're looking at even the most extreme options for whatever reason. And actually right after that, there was a release from the U.S. Department of Commerce that indicated that it's mostly a no, that there might be a little bit of truth to it. Let me pull up that post, actually. Did you see that one?
I don't believe I did.
Yeah. Okay, here it is. I think I just actually screenshotted it, so they don't get the views that way. No, I'm just the U.S. Department is committed to promoting secure exports of the American tech stack. We successfully advance exports through our historic Middle East agreements, and there are ongoing internal government discussions about formalizing that approach. Today, there was reporting that we were returning to the AI diffusion rule. We will not. It was burdensome, overreaching, and disastrous. So there could be something like this, which I don't even love that, especially unless they mean agreements as far as I don't love it. I'll just say it does create investment in the United States. It's beneficial to us. Philosophically, but it seemed to repudiate what was put out there, at least a lot of the sensationalism, a little bit of recovery in NVIDIA. Then it got hit again by this. Do you own NVIDIA? And if so, is it, or if not, is there some point where you're like, this is absolutely ridiculous and silly? And I know that you've been interested in valuation.
Me?
Yeah, you own NVIDIA, right?
Dude, I own a lot of NVIDIA.
I knew you were bullish on it.
Relative to the size of my portfolio, I own a lot of NVIDIA. Maybe not a lot for some people, maybe a lot for others.
Yeah. Like dividend day for NVIDIA for you is not insubstantial.
Let's just say I'm not making Mark Zuckerberg money off of a very small dividend.
Yeah.
But so I'm NVIDIA is, to me, whatever. This is not great, but I don't think it's a big impact for NVIDIA. I still think NVIDIA is one of the most disrespected companies on a dollar basis. And, when I look at the earnings and I look at the profitability, I look at how they're going to scale, the headlines are not going to shake me out of it. What's going to shake me out of it is if the investment thesis changes.
So what you're saying is you're not as bullish on Costco and Walmart as you are NVIDIA.
No. No, it just doesn't make any sense to me. And the reason it doesn't make sense is because Amazon's revenue is stickier than both of theirs, and Amazon is getting disrespected compared to them. So,
So if people are not in the know, Steve writes amazing Seeking Alpha articles. He's written about the valuation and, of course, the opportunity with NVIDIA, the disrespect. I didn't know what size of NVIDIA you held, but
I mean, it's double-digit portfolio percentage. It's not a small position in the portfolio. Look, I kept adding. During Liberation Day, I added. And I added most recently around 170, 175. Probably a couple months ago. I mean, it's something that I think is going to go up. I think it's $250 stock easy. I don't know if it gets there this year, and I don't know if it breaks out. The problem I have is the market's psychology and view on tech is so bad that Nvidia had two drop the mic quarters that each one was better than the last, and it couldn't break out off of either of those. And if it couldn't break out off of either of those, that makes me a little worried about what the upside potential looks like. This thing may not be past 200 over the summer. We have no idea. Right now, this stock is in the penalty box. I don't know what it's going to take to get out of it.
Yeah, and I think it has to be external to NVIDIA. I don't know that we've talked about this, and maybe this is the last bit of the segment. We'll shift over to after hours. I've got a really interesting study, which study doesn't sound interesting, by Anthropic that I thought they nailed as far as employment in AI. I know we've talked about it in the past. There's some really interesting takes there. I'd love to hear what you say, but if you have a different topic, that's fine too. But with NVIDIA, it seems like a golden opportunity. It could absolutely be disrespected just because there are two narratives that they can't fight against both at the same time. It's like impossible. So the AI is a bubble and CapEx is going to fall off a cliff, guys. And so if there's a slowdown, I mean, those guys look like they're right. The stock price tanks, people get out, they get scared, whatever. And then the guys that are like, AI will eat the entire world, which is also bearish. And so if NVIDIA does too good, it feeds that narrative. And so they're in an impossible situation. What has to happen is one of those two needs to be disproven. I think the easiest one is just because where AI is at right now, even though it's really good and effective at a lot of things, is to dispel the AI will eat the world narrative. There is a lot that they will not. There's a lot of areas, such as this study actually alludes to, where there's like basically no penetration at all. And it's limited even as far as it can go, that there'll always be humans at the will of those certain services, jobs, and aspects of their life. So, so I don't know what it'll take necessarily beyond that, like how long it will. It could be another 6 months. It could be 9. The nice thing for me, Steve, is there are a couple of stocks. Mostly what's in my portfolio, I like the weighting. I'm going to keep it where it's at. I really want to add to NVIDIA. I've added some of the PayPal losses / gains were put into that. But I just need to DCA it at this point. Buy a few shares every week or something.
What's your average price? Do you know?
I can check.
Roughly?
It's actually just in one of my portfolios. So, actually, there's an easier way to check too, because they have the family portfolio. But that's the wrong account. Hold on.
And while Roy's checking, I do agree Destin Rivals could be the next Evolving Skies.
So 128 is my average.
Great average.
So not in super early, but I took full advantage of that Liberation Day dip. Yeah. I've added to it higher. I've added to it higher than the price is right now. But I think that the price is stupid. It can get stupider. It can be stupid a long time. If so, I'm going to continue to buy a lot more. And as things run, if things ever run again, we'll see. But like if I have to trim some VG because that hedge has worked out too well and it's not supposed to be a hedge, not supposed to be that weighting. Palantir goes to stupidity right now. I like where it's at, but like let's say it doubles, it shouldn't be double. Or Air Test Systems does its thing, plays out. That's probably all going in NVIDIA, or at least most of it.
I agree. And we all wish we could have Tanner's average. We don't.
No.
I would consider buying more NVIDIA, although I don't have as much Amazon and I really want more Amazon. So it's going to be interesting to see what I end up doing. I have money on the sideline right now. I need to get I need my accountant to let me know what I owe in taxes, and then I will be off to the races again.
Sounds reasonable.
Yeah.
Shall we call it?
Yeah, one sec. I'm just reading. Let's just go through the chat. Let's give the chat 5 minutes, answer some questions.
Yeah, absolutely. And just so you guys know, I'm sure probably most of you are aware, if you're a member of either of our channels, that gives you access to our after hours content. We may, or at least I hope, at least part of what we'll discuss is this Anthropic study on how AI is affecting the U.S. labor market. gives us a really good read into some of those AI concerns. You guys can check that out yourself. But if you want our take, you do need to be members of either of our channel, give you live access about 5 minutes after this show. All right, what are some of those questions we want to hit? Steve?
Well, June does not have a question. She made a statement, and I'm doing the same thing. I am bracing for my tax bill also. Let's see. I want to get NVIDIA below 170. Hope I will get a chance. You may. I mean, we don't have crystal balls. I wish we did.
Yeah.
Is SAS back? Let's let Roy answer that one.
Is SAS back? It kind of feels like it. I didn't think it was, but the strength that we've seen, let me double check CRM. How did that do today? That's kind of my barometer. Yeah, it was up, well, basically flat. Flat on a day like this was good. It may be. It seems like the selling pressure has certainly abated. We've seen some massive buys. The trade desk, if you put them in this space, that's the biggest one. But we of course saw that buy with McDermott on ServiceNow as well. Maybe like Wix also. Wix is doing crazy things and getting a lot of attention from the market as a result of those like really good crazy things. I still think maybe not. Like nothing has really changed as far other than the valuation, the stock price, for that narrative that really killed SAS, which was all this stuff that's happening as far as AI is going to displace all these software stocks, which some of them I think it's more credible than others, but it's going to take longer than what the market's treating it at. That's not really shifted. So is the share price enough to maybe just establish a floor? Yes. Is it going to go back up, 20%, 30% from here? Skeptical.
I think SAS is finding a bottom. I don't know if we can technically say it's back. I think that the market is going to figure out who the winners are and reward them, and the rest will be in the penalty box.
Yes.
And I made the statement yesterday. I exited ServiceNow yesterday. I figured it would sell off today. It didn't, but I got out around 122 something, made a profit. If it doesn't come back down, that's fine. I don't need to be in it, but I made money on it. It shot up so much the past 2 days that I was like, you know what? Let's take the profits while the profits are there, lock it in, and we'll figure something out. So Salesforce and ServiceNow are the two I really like in that. And yes, I am very excited for the LA meetup. A lot of people supposedly are coming, so it's going to be really interesting. Now, I am not happy that I found out how late it is. So I found out that the meetup is from 6 to 12 at night, and that means it's from 9 to 3 a.m. Eastern time. So I don't know how the hell I'm going to stay awake for the whole damn thing. Got to try to sleep in on Saturday. I try to sleep into like noon somehow.
Yeah, that travel is rough, man. So it sounds like maybe there'll be one in Texas. I don't know if he's mentioned the location yet, but I'll plan to make that one if it happens late this year. So and hope to see you in New York before then. We'll see.
Wait, what?
I said nothing planned, but I hope that life sends me to New York again before then, so we can meet up again.
Yeah, I mean, hopefully you're out here again soon.
Yeah. All right.
Need a green market. Everybody needs a green market. Sometimes it just doesn't happen.
Yeah. That's why being long-term is important. Only using money that you can afford to not have right away.
Absolutely. All right. We're going to call it. We're going to shift to the after hours. So give us 2-3 minutes and it'll be live. Roy, I put the link in the private chat. And we will see everybody either in a couple of minutes on the after hours or next week. Please go follow Roy if you are not following him. And we will see you in a little bit. Have a great night, everyone.
Likewise for Steve. Check out that Vlad interview.